Welcome back to Market Insights by Nebula Trades, where we turn data into actionable strategies. I'm Nova, and today's episode features an in-depth look at SPY, RBLX, and ROKU. With detailed Greek profiles, price action zones, and trade setups, we'll uncover where the opportunities lie. Let's jump right in. Starting with SPY, the delta profile reveals a significant imbalance in directional exposure, with market makers holding net negative delta positioning. This creates natural buying pressure on downside moves as dealers must cover their short delta exposure. Concentration of delta at the $604 to $605 strikes establishes a critical price zone where hedging activity will be most intense. The gamma profile shows significant positive exposure concentration around current price levels, creating a containment effect through dealer hedging. Dual gamma peaks at $605 and $610 establish key reference points where price behavior becomes highly predictable. The Vanna profile indicates that rising implied volatility will create upward price pressure through dealer hedging requirements. Concentration at the $610 strike makes this level particularly sensitive to volatility changes. Major peak, $607 strike. Secondary peak, $600 strike. Expect reversion at these levels. Now let's discuss SPY levels for this week and our directional bias. The bias for SPY is bullish, driven by strong positive delta and Vanna flows that provide stability above $605. Market makers' gamma positioning reinforces a buy-the-dip environment, with resistance at $610 and the potential for a breakout towards $615. As long as SPY holds above $605, the upside scenario remains favored. However, if SPY breaks below $605, the bullish thesis is invalidated. In that case, shift to a short bias, targeting $603 and $600, as negative gamma flows are likely to amplify downside movement. Now let's talk about Roblox. The delta profile reveals an extremely strong positive skew with 88% of positions carrying positive delta exposure. Concentration of positive delta at the $52.50 strike creates a strong support level through dealer hedging requirements. The negative delta valley at $60 suggests this level will act as initial resistance, requiring significant buying pressure to overcome. The gamma profile shows significant positive exposure concentrated at the $60 strike, creating a strong price magnet through dealer hedging flows. The negative gamma pocket at $55 suggests potential acceleration of moves if price breaks below this level. Charm indicates significant time decay effects concentrated around current price levels. Positive charm exposure above $60 suggests time decay will create buying pressure through dealer hedge adjustments, while negative charm below $55 will force selling pressure as positions approach expiration. The Vega profile shows strong positive exposure above current price levels, indicating that volatility increases will create upward price pressure through dealer hedging. Concentration of positive Vega at $65 and $60 strikes suggests these levels will act as acceleration points if volatility expands. Now let's discuss RBLX levels for this week. RBLX is a breakout trade candidate with entry opportunities near $57 and $55. A breakout above $60 could lead to momentum-driven moves toward a price target of $65. We see the potential for RBLX to rally up to 25% more into next year, depending on market structure and if the data remains consistent. Finally, let's go over ROKU. The delta profile reveals an extremely bullish positioning with 81% positive delta exposure. This heavy skew towards positive delta suggests dealers must maintain long underlying positions to hedge their short call exposure, creating natural buying pressure. The gamma distribution shows significant positive exposure concentrated above current price levels, particularly around the $90 strike. This creates a framework where price movement becomes increasingly supported through dealer hedging as we approach these levels. Charm indicates significant positive decay effects above current price levels, suggesting time decay will force dealers to maintain increasingly long positions as expiration approaches. This creates natural support through mechanical hedging requirements. The Vega profile shows strong positive exposure above current price levels, indicating rising volatility will amplify upward moves. Now let's discuss ROKU levels for this week. The bias for ROKU is strongly bullish, with price targets at $85, $90, and $95. Key support levels are $80 and $82, making this an attractive zone for entries. A breakout above $85 could lead to further momentum toward $90, and we see the potential for ROKU to rally up to 40% more into next year, depending on market structure and if the data remains consistent. That wraps up today's analysis. Thank you for joining me on Market Insights by Nebula Trades. Remember, these are insights, not direct trading advice. For access to real-time Greek profiles, educational resources, and an excellent trading community, subscribe to Nebula Trades Discord. You can find more information on our X profile at Trades Nebula, or through our WAP page we're currently offering a 7-day free trial. That wraps up this week's analysis. Until next time, trust the data, ignore the noise, and keep crushing the markets.